Hello and welcome to your shipper update. I'm Mike Vincent. He's Anthony Smith, our lead economist. What is going on, my friend?
So we're going to talk about something that's going to be in the upcoming week release. And so that's going to be ISM PMI. I'll talk about this index all the time because it's a forward-looking indicator, but it doesn't beat our flatbed outbound tender rejection index in terms of recent data. So when we're looking at it, we can definitely take some bits of information out of it. So this is going to be one of the headline items I'm looking forward to because there's not a lot of economic releases. So what I'm doing now is looking at the week ahead, what we can expect in the upcoming week, and what we can kind of really predict in the upcoming quarters for certain industries upstream. And so looking at the ISM PMI, the Purchasing Managers Index, if you don't know already, it's based around the number 50. It's a index that really dictates or shows the direction of manufacturing upstream. And so
upstream, this is a survey of purchasing.
It's a diffusion index, and it's going to be a diffusion index and a survey sent out to purchasing managers throughout the country, and it really shows what's happening for those purchasing managers, what they're seeing in terms of pricing, capacity, new orders, things like that, backlogs, which we're going to talk about.
People who would know which way the economy is going in this sector is who they're talking to.
Exactly, and so what we're seeing here, the latest number showed a 59.9 percentage point reading, showing that that's well above the 50 threshold, showing that there is expected growth in the upcoming month. And so
it's pretty high.
It is pretty high.
All the way back to 2017, and that's the highest since when? Beginning of this year.
Yep, that's a really high number. And so I think we kind of get a little bit sidetracked sometimes when we see that, it was at 65 or nearing 65 percentage points, and now it's down to 59.9. Yeah, it's down, but it's still expanding nonetheless.
Still very, very nice.
Yeah, and so in our next chart, we're going to look at one of the indicators within it, and we're going to see the backlog of orders. And this is what I'm kind of concerned about, is that that backlog of orders starting to tick up as of recently. So this is going to be one of the areas I'm going to watch closely within the upcoming report. Seeing that it's now at a 68.2 is telling me that those backlogs are building up as new orders are continuing to pour in. We just got the non-defense capital goods new orders report, and just yesterday showing a 0.5% increase on a month-to-month basis.
Non-capital goods.
So non-defense capital goods, excluding aircraft. And so those new orders came in showing that there's more business-to-business activity happening upstream. And on a year-over-year basis, we're in double-digit levels. And so that's seeing that we've been expanding essentially in that report, that measure, for well over 14 months now. Generally, I think there's been 1 or 2 months of slight downward movement, but nothing overt, nothing persistent. And so what we're seeing right now is that despite those increased prices, despite all these factors, these headwinds, the lack of labor, these new orders are still coming in. And because those lack of labor, because those lack of resources, those backlogs are starting to build up. And that's going to be one of the areas that we're going to be watching closely, because as those back orders build up, in the next chart, we're going to see what it means within our transportation industry. So
let's see it.
That's that flatbed outbound tender rejection index I was talking about earlier in the green line. And we're seeing that it's remaining elevated. And
it came up to a plateau, and now it's kind of going this way, right? So it's kind of hit almost what we would start to think is its natural ceiling-ish area.
It is, and so it's funny because it's starting to hit that natural ceiling, and it's moderating around that level, but it's much higher than what we've seen historically. And this is kind of similar to what we were talking about last week when we were talking about anticipation of even if there is a slight slowdown, quote unquote, in manufacturing and production, because it's still very much strong.
Very, very. It's going to be a big slowdown to get back where it was before.
Exactly. And so even though we're starting to see some slight easing in a sense, that flatbed outbound tender rejection index is going to remain elevated because there's such a backlog. So even if production were to slow or ease, these flatbed trailers are going to stay occupied. Even if these housing construction, these builders are starting to slow down and not accept as many projects, housing starts are beginning to not fit those completion rates that it used to, we're still going to see a lot of volumes on these flatbed trailers just because there's such a backlog going through the
There's
pipeline.
A huge backlog. And I just want to point something out that you mentioned really quick earlier is the green is the FOTRI, right? Or the flatbed outbound tender rejection. That's daily.
Yeah. Near real time.
The blue is your industrial production, and it comes out monthly. So you can see how well the flatbed information that we have on a daily basis predicts what is going on in the production in manufacturing.
Exactly.
That's why I can see why it's one of your favorite.
I love it. I love looking at it. And once you know what's going on upstream, you're going to know what's going to happen downstream.
Absolutely. It all flows downhill, right?
Exactly. And so what we have today, it's not going to be an economic release, but Jerome Powell, pretty much the country's chief economist, is going to be talking about, and expected to talk about inflation, and that inflationary pressure is expected to be longer than what the journal expectations were. I think the government was the last one to expect that inflationary pressures were going to persist for some time, but he's going to, I think, make that announcement. And so we can see that kind of prolonging here in a sense with production still going on.
And with the backlog, right? The backlog shows that as well, right? I mean,
Exactly.
we're not stopping purchasing, so things are more expensive. We keep buying them, inflation keeps going up, right?
Exactly.
Excellent stuff. Thank you so much, Anthony. We'll catch up with you a little bit later in the show.